Welcome to etvFutures.com. Today is Wednesday, February 6th. I'm Caitlin Sisney with your Commodities Open. Crude oil fell more than $1 a barrel after the government reported that U.S. inventories surged more than 7 million barrels. It's the biggest gain in almost 4 years. Crude is trading at $86.81 per barrel on the NYMEX. Meanwhile, natural gas is trading at $8 per million British thermal units. Gold rose on speculation investors will add to holdings of the metal to take advantage of a 5% drop from a record last week. Gold is trading at $908 per ounce. Silver is up at $16.625 an ounce. Today we're joined by Bob Yawger from MF Global. He'll give his outlook for the commodities market.
This is Bob Yawger from MF Global, and today's EIA data released at 10:30 could be nothing but bearish today. Every element of the numbers are more or less bearish, starting with the whopping 7 million barrel build in the crude oil, an unexpected build in the distillates, which at this time of year usually a draw of a good 2-3 million barrels, and also a nice healthy build of 3.6 million in the unleaded gasoline, taking gasoline stocks to the highest level since February of 1994. Cushing, the delivery point for NYMEX crude oil, saw a build of 700,000 contracts today. Crude oil imports up 458,000 barrels a day to a very, very healthy 10.5 million. And then on a kind of a more of a negative stance, that which will be a bearish statistic, is that product demand last 4 weeks is at 20.62 million, down from last week and below 21 million, which serves as a semi-magic number that you need to be above to have a healthy demand situation in the market. So we're at 20.62. That is a rather lame number. And other things that gasoline is building at this time of year, despite the utilization cuts. Now, that's a big issue. Utilization or refinery runs, however you want to call that, they were off by I believe 7% or 0.07%, down to 84.3%. So the impressive thing is here that as refiners are shutting down capacity, you're still getting gasoline building at a very healthy rate. So that is a number which would be, you're going to get a demand destruction that is shown in the last 4-week demand number versus your refinery utilization, and you're still getting a build of 3.6 million barrels of gasoline. That's a pretty impressive performance by the gasoline market. But the only bullish thing that you could really walk away from this, all these numbers are, and it's really not something that is being looked at that strongly at the moment, though in the long term it could become a factor, is the refinery utilization number. The fact that it has come off a little bit. At a certain point down the road, they will tend to cut back utilization so far that you will have a situation where there will be shortage of product. That shortage of product will eventually manage to rally the market back. But that's not something that's imminent. That's something that is being way overridden by the builds across the board, and you can really make nothing but you really can't come to any conclusion here that this is a bearish statistical day for the crude oil. Now, there is one other thing that's not related to the numbers, and that is the fact that the Dow is looking rather strong today. And there is a possibility, these things have a way of happening, that if we can rally the Dow back rather strongly, that there is a chance that the crude oil could trade towards unchanged. But you will have a battle here between the numbers that were released at 10:30, which are pretty much bearish across the board, versus a relatively optimistic down market today that is probably going to miss. It is just it is above 100 points right now, so you're going to have a little bit of a battle there. I suspect that that will be the determining factors of the day. Bob Yawger from MF Global.
Thanks, Bob. That's all for your Commodities Open. I'm Caitlin Sisney. Join us later today for the Commodities Recap right here on etvFutures.com.